Hello, Uganda. Good evening and welcome to this edition of the Hotseat on 933 KFM. I welcome you, our listeners, across this beautiful land, the Pearl of Africa. My name is Patrick Kamara. Tonight, we're looking to a topic that is very important. Insurance for investments, and we ask a question, how necessary is it? And my guests this evening are men of substance who understand this subject very well. We'll be moving together to unpack what it is. And let me introduce my guest this evening. I have Manager Licensing and Compliance at Insurance Regulatory Authority of Uganda, Mr. Katete Kevin Walungama. Thank you so much for joining us, Kevin.
Thank you for having me.
And with us also in this studio, we have Director Strategy and Marketing Development, again at the Insurance Regulatory Authority of Uganda, Sande Protazio. Thank you, Sande, for joining us.
Most welcome, Patrick, and good evening, our dear listeners.
You know, it's many times I've had an opportunity, especially with you, Kevin, to talk about insurance. But now, specifically, insurance for investment. Let me go straight to the question. How risk management is critical for any sustainable investment. What is your view in as far as insurance is concerned?
Okay, so my view is that when it comes to risk management, I'd say that insurance is a cornerstone. Now, risk management has different ways in which it works. So you can use risk management to mitigate or to reduce a risk. You can even just say, okay, fine, I can handle this risk based on what I have, so you don't need to reduce the risk. But now, insurance allows you to transfer the risk. Now, why we say, or why
give us some kind of a particular, let's say, business or a particular service, and then and how you can manage that risk. So we just don't talk in at least we have some example. Somebody can maybe understand more.
Okay, say you have a supermarket, and the supermarket you have stock. So your risk could be, the stock could be lost from a fire or burglary or theft, or destroyed by, say, a flood.
Okay.
Yeah, so all these are risks to your stock and can impact you financially if these risks occur. So when you look at risk management, there are those things that we put in place to either reduce the impact of a risk when it occurs or prevent the risk from actually happening. Now, what insurance does is it comes in to help you see those specific areas that you need to mitigate, but at the same time, when the loss does occur, it will come in to compensate you financially. Yeah.
Okay, so that's the kind of example. Maybe, Protazio, you would want to elaborate on that?
Yes, for me, I'll give an example of a vehicle, a taxi. You have very many of my friends in the transport industry. You know, you can hire the best drivers, you take them for all the trainings in this world, and you think all is covered. It is also possible that you have acquired extra units of taxis using a loan. So the money which they make on a daily, you are using it to pay the loan. Now, that business is sustainable. That kind of investment is sustainable if only you can eliminate risk. But what are the possible ways of eliminating a risk? Like Kevin mentioned, one way is to be as careful as possible. Two is put maybe speed governors so that you say beyond 80, you cannot go beyond 80. You hire, experience shows that elderly drivers are more stable. You don't hire these very young ones who are going to test the speed of the vehicle. But even after doing all those, there is some element of risk which remains. In insurance, we call it residual risk. So insurance is not per se a substitute of good risk management, that it is coming in so that even when you overspeed, even when you leave the car unattended to, no. Insurance comes in to manage that risk which remains after you have done all your best.
Anything can happen.
Anything can happen. Because sometimes actually it's another driver. Yeah, Patrick, you've been seeing some of these things on social media. Somebody's overtaking in a very sharp corner. You are coming in your right of way, but somebody's overtaking.
Somebody brings you trouble.
You get a head-on. The vehicle is written off. If you are carrying passengers, some passengers have died, if not all. Now, as the owner of the vehicle, you have challenges. One, you want to replace the vehicle, assuming it was on loan. The bank wants its money. If there have been passengers have died, you have to compensate public liability. The relatives will take you to court. You have to compensate the families. Now, insurance comes in to give you that kind of assurance. Actually, we say insurance is a partner in business. it helps you to do things in a more sustainable way, or even to do things that you may not have done. So when such a thing happens, the only thing you have to do is to notify the insurance company, because they have given you cover and given you a promise that should these eventualities happen, there is a partner to rely on.
We have your back.
Exactly.
So let's look into how this impacts on the economy. For example, in what way does the presence of well-regulated insurance sector contribute to overall economic stability and long-term investment growth in Uganda, Kevin?
Okay, so there are two ways of looking at it. One way, on one side, you have the insurers investing in the economy itself, but at the same time, you're having the insurers safeguarding.
When you say insurers investing in the economy, is that people are taking policies, right?
Yes, people are taking policies.
That's the investment you're talking about?
No.
What is it?
Yeah, the investment I'm talking about is the monies that go to the insurance companies in form of premiums is actually invested in the economy. Yeah, so we require these insurance companies to have sustainable investments so that as and when claims fall due, they're able to pay. So you find insurers invest in government securities, for example, and this goes to assisting the economy.
Oh, so you're telling us when the people get covers or policies, you call them policies, right?
Yes, policies.
So that money actually is not just taken to the bank. That money is invested somewhere to make more money.
Exactly.
Okay.
Exactly. But also, you're looking at the business itself being released in terms of the money they would have otherwise set aside to protect themselves in case of the eventualities of the risks. Actually, that money is released to either improve the business or grow the business. So the premium you actually pay is usually much, much less than what you'd have to set aside to protect yourself from the risk.
Yeah. But these insurances are some of them are not indigenous Ugandan insurance companies, are they? So are they investing in the Ugandan economy?
Yes, actually we have an investment regulatory regime. So as the Insurance Regulatory Authority of Uganda, it might be a British owned company, but you don't have the leverage to take money out the way you wish.
Okay. Because
we have to give guidelines. We have even identified the assets that they have to invest in.
In a liberal economy, you even have to control them at that level.
Yes, because why that is very important, this is not their money per se. And as the Insurance Regulatory Authority of Uganda, our role is to ensure that when Patrick has entrusted his money with the insurance company is actually holding it in trust, if I say.
Yes.
So somebody should be there to make sure that this money is available, it's not lost in investments which I could term as reckless. So we have provided guidance based on, of course, trying to balance return with risk. So the very high risk investments, you'll not find any regulator allowing such.
Let me ask, is there a minimum amount that an insurance company must have before they engage into this business?
Yes.
And how much?
We have minimums, 6 billion shillings for a non-life business, and 4.5 billion shillings for a life company. So it's not that everyone who wishes to start an insurance company will start, because that's the minimum capital that we need. But over and above that, there are other monies that we require, because you will need running capital, you will need offices, you will need personnel, etc., who are not necessarily part of this. But Patrick, I wanted to say something on the investment, which I think is very critical. Insurance, in principle, one of the fundamental roles of insurance is to de-risk the economy. And I can give an example. In the past, people were finding it very hard to lend to agriculture, because agriculture, as known, with its heavy reliance on nature, is highly risky. But insurance have made it a very attractive area now for banks, because they have de-risked agriculture by providing that assurance that whether it's drought or excessive rainfall or floods and productivity is affected, you can come back to somebody who will settle the loan balance. So it has the risk the economy, but also generally even funders.
But that also can be on a very great disadvantage to the insurance company, because the risk actually is there. It's overwhelming, especially when the vagaries of nature can always wipe off most farmers' projects, and then you find the insurance is on the wall.
You see, that's the business of insurance. Actually, where there is no risk, there is no business for insurance. That's what they have specialized in. So, by de-risking the economy is able to attract investment resources from those willing to invest, because the risk profile has been lowered and the economy generally has become more competitive. I've talked about agriculture, but you can think about all the other sectors. Oil and gas.
So by de-risking the agriculture sector, with insurance jumping in, Kevin, can we say now you have seen an increase in the volumes of agriculture projects Ugandans are taking them up? Because at the end of the day also, it's not about the risk involved, but also, you know, you get into agriculture, there's no market. There's so many things, post-harvest handling and markets and all that. It's more than just having a good harvest.
Yeah, I can say that in terms of uptake of insurance, it has grown since, I'd say, about 2014 till now. We should have about 72,000 farmers or more. Yeah, I'm not so sure about the number, but the uptake has been growing year on year in terms of farmers who are taking it up, which means that these farmers who are taking up insurance are covered against drought, floods, pests.
There's an agricultural credit facility, I think, that from the government through the banks, through some banks.
Yeah.
And is that what the farmers are using? Are those the loans they're taking, and is that what you are?
No, we work with the SCF, the agricultural credit facility. When it's given to these banks, now the banks are lending to the farmers. Now, one of the requirements to access and protect this facility is to have an insurance cover. So there has been also
an individual farmer,
individual farmers, groups,
okay.
And there has been another arrangement on the side of government again, and they have put in place what we call the National Agriculture Insurance Scheme, where they have actually said, okay, maybe the big farmers can afford insurance on the market price, but how about the small farmers who constitute the majority of Ugandans? And they have provided a subsidy for the premium, whereby now, if a small farmer is to buy insurance for his farm, he's paying only about 50% of the actual premium. And here, actual premium, we are talking about maybe 5% of the value that is at risk. Then for big farmers, since they have capacity, government has provided about 30% of the premium subsidy. So that has made it a bit attractive. And from that, to add on what Kevin has mentioned, we've seen the volume of loans going to farmers going up. Because even with that agricultural credit facility, banks were still hesitant.
So what you're saying, getting an insurance through the agricultural credit facility is not optional, right? Every farmer who wants to get that loan must also have that insurance cover.
Yes, it's almost a requirement, and
I'm twisting them into getting an insurance, right?
No, not really. It's actually in your interest, because in the absence of insurance, for me, I've tried farming. It's actually now like almost a gamble. You try, even if you try to estimate that it will rain early this time round or it will delay, you are not so sure. Now, what happens when you have planted 40 acres of maize and it's drought? So actually, the insurance is not in the interest of the bank to begin with. It is principally in the interest of
the farmer.
Right. We are looking at it as cost of agriculture, part of the cost of agriculture.
Kevin, let me also ask a question that may be related to what I asked earlier. How exactly does insurance help mitigate the risks faced by small and medium enterprises, SMEs in Uganda, and what role does this play in fostering local investment and entrepreneurship?
Yeah, so when you look at what has been mentioned so far, the role played by insurance in de-risking, the risks faced by small and medium enterprises are more or less the risks that would say are related to flooding, fires, and other risks that our common day person is having. So when they take up insurance, it means that access to credit facilities is opened up, and it also means that they're able to, using the small capital they have, they're able to start their business and protect their stock and business.
All right. Sunday Protozio and Katete Kevin Walungama. Gentlemen, we're going to take a break and the hot seat will be right back. Welcome back to 933 KFM, and this is the hot seat. My name is Patrick Amara. My guests this evening are from the Insurance Regulatory Authority of Uganda. I have Katete Kevin Walungama, Manager Licensing and Compliance. I also have Sunday Protozio, Director Strategy and Market Development. We're discussing insurance for investments and how necessary is it. So, gentlemen, if I may begin with you, Mr. Sunday, I want your view on the insurance industry's capacity to support strategic investment in Uganda.
Thank you.
And I'm saying this because there are many strategic investments in this country now with colossal sums of money. We're into the oil sector. We're into energy production, Karuma Dam. Some of them are like $2 billion, 1.8, $4 billion. And I'm like, Uganda has never had such investments before.
Yes, you're absolutely right, Patrick. And indeed, many Ugandans think the insurance industry is very small, with small companies. It depends on where you're standing. Where we stand, we had already mentioned that for every insurance company to be given a license, they must have minimum capital. 6 billion sounds small, but that is the minimum. In the year 2023...
You understand, 6 billion is not even $2 million.
Exactly.
But we have investments worth up to 5 billion, 4 billion
exactly.
that are coming to Uganda.
But together, insurance operates, they operate models, especially for those big investments like oil and gas, called the consortium. They recognize that the risk is huge and put together their resources. But in addition to that, insurance generally is a global business. Now, the mode of insurance is that you take on what you can swallow. Now, you offload whatever you can't swallow.
You reinsure.
You reinsure through reinsurance.
Okay.
So that's what makes it global. That even a small company with maybe a net worth of 500 billion could insure a 1 trillion risk by just taking maybe 2%, 5%, and reinsuring the 97%. Now, there is an advantage in reinsurance because when they reinsure, still they get some money back in form of what we would call reinsurance commission. So yes, because of the nature of the industry and how insurance operates globally, being a global business, there is capacity. Even to insure the unthinkable amount of sums through that arrangement of one consortium, like we are doing for oil and gas, we realize that a company going alone may be very risky because a single risk can wipe out the entire company. But when they are together, they build capacity. But over and above the local capacity, the insurers also bring in extra capacity to make sure that whatever risk there is actually covered.
Kevin, what does it take for the global insurance company to accept taking on the policies you have picked in Uganda when you are managing your own things locally? Are they not somehow reluctant to do that? How do you ensure they are not reluctant? They can actually work with you.
Okay, so that's a very interesting question. First of all, we need to first understand that risks that are in Uganda have to be insured locally. So the appetite locally is what will attract the investors or the reinsurers abroad. So the reinsurers abroad get to understand the nature of the risk locally from our local insurers. They already have agreements. We have what we call reinsurance treaties. We have what we call facultative treaties. And the reinsurers abroad, what they're looking at is they don't just insure in one place. They spread their risks by insuring in different or taking risks from different markets. That way, it means that for them, they're also de-risking by placing their risks in different baskets. Yeah, so there's definitely an attraction for them, but even for them to understand the local insurers become very important.
Are there areas where you are like, this is a no-go area for us, even though we are supposed to take risks, but some businesses or investments are just too risky or are prone to risks and you stay away?
Yes, actually, it is possible, but you see, maybe I start from saying that like any other business decision, taking up a risk is a business decision. Now, where the risks are extremely high, what the insurer will do after they have done the assessment, they can reject the risk And indeed, sometimes they do reject the risk. If you want a life cover, for instance, a life cover, you want to buy a 10-year cover for your children, and they find your blood pressure is 200 over, say, 140. You say you also have a heart issue. You list all the problems which point towards the possibility that maybe in the next 1 year you may not be there. Chances are high that an insurer may say, I think we are rejecting this proposal.
Is that too intrusive to even ask for all that?
It's not. It's underwriting information based on the volume of money that is at stake. They do medical underwriting. They can subject you to some tests because they want to know the kind of risk. So that they don't also issue a policy today and tomorrow you are going to claim on it. So yes, it's possible to reject a risk, but most times they price it accordingly. Now, if, for instance, you are going to buy a medical cover, but your medical history shows that almost every week you are in hospital, they may not reject you, but they will tell you a premium, which probably when you look at it yourself, you may actually say, maybe it does not make sense for me to insure. So the risk, the extent of risk is usually reflected in the price that you have to pay. The lower the risk, the lower the price that you'll have to pay, and the higher the risk, the higher the premium that you'll have to pay. That's why we usually encourage that when you're insuring, also ensure that you have done some good risk management so that your risk profile is generally low. That way, the price that you'll have to pay for insurance will actually be
But my risk profile is being low, especially if it's medical. How do you get to know a medical history?
Insurance operates on some principles. One of them is utmost good faith.
Undercover intelligence.
In most cases, we require that you talk the truth.
Okay.
But in some instances, especially for life covers, the insurer may subject you to some medical tests to really confirm some of the facts you have given.
On these strategic investments, Kevin, and there are some Ugandan projects where is it possible for them to disregard the insurance companies in Uganda and insure somewhere else out of Uganda, and do you regulate that?
Okay, so in terms of insurance, if it's a local risk, the first point of call is the local insurer. So even when the local investor wants to disregard the local company, they have to first go to the local companies. And the whole point
I'm trying to give an example. It's Talo Oil, it's Chinook, it's Total Energies.
Yes.
They are doing business in Uganda.
Yes.
And can't they probably bypass the Ugandan insurance company and insure somewhere else?
The only point at which they bypass is where the insurance companies locally don't have the appetite. Yeah, but when it comes to the legal requirement, local risks have to be insured locally. Yeah, so it's a point, the time when the insurers locally don't have the appetite, or if they are looking at partnering with these foreign companies, because you find that the foreign companies already have the global covers. So it's through the global cover that they can partner with a local company or with the consortium.
So for such investments, the premium that is being paid, I can imagine, is colossal sums of money. Is it again invested in Uganda, Sandy?
Yeah, just before that, there is Kevin was talking about the Insurance Act, to be specific. Section 8, subsection 3 of our Insurance Act stipulates that all risks are to be insured here. So there is a law. So if they went against that, of course, there are legal implications if we get to know. I thought that we should make that one clear.
Okay.
We are the ones who should say that we don't have capacity or we don't want that kind of risk. Then they have to get an approval from the regulator to place this risk elsewhere. Without that approval, they cannot. But the question you are raising is the money that is realized as premiums. Yes, I mentioned that we have investment regulations. So the greater part of the money is invested within the economy. They are actually, when you look at the institutional investors, the ones who are buying government securities and bonds, insurance plays a very critical role in that space. Most of the money they're actually using is this money we are talking about, of course, plus the other incomes that are realized. Some insurance companies have properties, they make profits which are invested if they have not paid dividends, etc. So the investment regulations require that money is actually invested here. So the only money which is perhaps going out are the dividends, which of course are also subject to approval by the regulator, because we have to see that after paying these dividends, you are still within the regulatory requirements of the country.
So would we say, Kevin, that the insurance business in Uganda is vibrant and thriving?
Yes, I would confidently say that, because year on year, insurance business has been growing. And this is when you're looking at each class of business. If you're looking at the non-life class of business, it has been growing. Uptake has been growing. When you look at the life sector, it has also been growing. So if we're to look at what was underwritten last year, we are looking at about, is it 1.7?
Yeah,
trillion. Yeah, roughly that. But that's a growth on top of 1.4 trillion the previous year. So the growth is a continuous growth. Even during COVID, still we posted a growth. Yeah.
So okay, gentlemen, Kevin Walungama and Sunday Protazio from the Insurance Regulatory Authority of Uganda. We're going to take a break. When we come back, let's look into the reservations that Ugandans have about insurance, access, affordability, believability, and stuff like that. We'll be right back. To 933 KFM, and this is the Hot Seat. My name is Patrick Kamara. My guest this evening, I have Katete Kevin Walungama, Manager Licensing and Compliance, and Sunday Protazio, Director Strategy and Market Development from the Insurance Regulatory Authority of Uganda. And we're discussing insurance for investments. How necessary is it? Now, there's the issue of Ugandans having reservations. How has the Insurance Regulatory Authority of Uganda enhanced access, affordability, and believability of insurance in Uganda, especially when we know that majority of Ugandans have had a lot of reservations in the past? Sunday.
Okay. Yes, indeed. The issue of believability in insurance is not new to us. And actually, when you look at our regulatory framework, we have basically tried to respond to that as much as possible. I think the biggest challenge has been on the issue of claims payment. If you spoke to 10 people in the street about insurance, one of the things which may come out of the 7, probably out of 10, they will say insurers don't pay. Even when out of those 7, maybe only one has ever experienced that.
But that's an indictment on the regulatory body.
Exactly. So what have we done as the Insurance Regulatory Authority of Uganda to try and change the mindset, but also ensure that actually people start seeing value and real value? One of the things we've done is to try as much as possible and come up with requirements on the insurer's side. Which requirements we go to check on and actually enforce. One of the things we look at, for instance, when we move into the insurance companies, to look at the records on premiums, but also records on claims. If Patrick has submitted his claim and all the required documentation, and we find it still outstanding, we get interest in that. So even to make sure that they pay on time, we have even issued guidelines on the number of days it should take an insurance company to pay a claim when all the required documentation have been submitted. Number 2, we have also instituted a bureau, some bit of a small court. The lawyers will forgive me. It's a bureau. It's a platform where we've put in place lawyers and technical people to receive and listen to those who may feel that they should have been paid, but they have not been paid. So that has made it has given the insurance policyholders a fallback position, because now they know, I will buy a policy. If you don't pay me, I will go to the regulator. And because of that, most companies actually wouldn't want to come to the regulator. So if they were a bit slow in executing their responsibilities, we've seen a lot of improvement. Because of that, maybe I would also mention thirdly is that we have started making this information publicly available. When you look at our reports, we publish information on claims. So you are able to see which company is paying claims and which one is maybe not. You are able to see which company has the greatest number of complaints. And certainly if a company has more complaints, that's not a company you would want to go to. But also when it comes to licensing, because every year we have to review the licensing status and say you can either retain the license or we are taking it away. So we look at these issues and see, are you still relevant to the market? But sometimes even we don't have to wait for that minute of saying you have become irrelevant to the market. We monitor signals.
Okay.
If we see the complaints are increasing, then we sit and say, no, you have to do. We give conditions. And because of that, Patrick, as I finish, last year alone, that's 2023, the sector paid about 800 billion shillings in claims.
Wow.
Now, this is a huge jump from maybe if we look at about 2013, where about 30% of the premiums was actually paid in claims. The 800 billion represents around 51%. So meaning that out of every 100 shillings collected in premiums, 51 by end of year is taken back in form of claims. And actually,
there are too many risks then.
We are very happy with that. That's not even very bad when we look at the global standards, because insurance is in the business of paying claims, legitimate claims for that matter.
Okay, I know as a regulator, you are looking at the needs of the insurance companies, but also the people.
Yeah.
And there are cases, Kevin, when the people who have taken policies also want to take advantage of the insurance companies. You know, some connivance, especially in the medical world. Sometimes you see the bills on the medical insurance tend to be higher than when somebody is paying real cash. And I'm thinking somebody could be trying to rip them off. How do you protect now the companies?
Yes, so when it comes to fraud, it's something that the regulator takes very seriously, as well as the insurance sector. And the biggest challenge we see is that fraud increases the cost of insurance. So basically what we've tried to look for is improve innovation, especially on the side of the insurance company, so that they can come up with avenues of identifying fraud without actually either, number one, increasing or, reducing accessibility, because sometimes these checks for fraud are the ones that act as barriers. Yeah, so we look for the insurers to innovate around that, but at the same time also innovate in a way that they're able to identify the fraud, because eventually it's not the company that is harmed itself, but it's the customers who are not fraudulent who end up paying more premiums. So that is the angle we look at it from.
You know, I'm asking that question because I happened to step into a medical facility owned by a gentleman of an Asian extract. And then somehow we decided to talk about insurance, and took me out and pointed to a hospital in the neighborhood. He said, you see that one there? It has fraudulently been built by insurance money. And I'm like, okay, this is an insider who understands the medical doctor. You're giving a service, but he also knows that some people have been ripping off insurance companies, and no wonder they have put up a nice facility, you know, which of course I can't mention. But these are the things seems to be making rounds in the public there.
Yeah, I can say that in terms of fraud is something that is very difficult to do away with completely. But we know that there are steps that we can take to reduce fraud. So in the past, fraud was a big thing. That's because, number one, even the insurers were not that sophisticated in terms of identifying fraud. But with time, we have picked up as an insurance sector, and we're able to there's a time we even said, okay, we are going to blacklist a couple of centers that we had identified the fraud at. And they had to clean up internally so that they could be brought back onto the insurance panel.
I've seen Sunday, sometimes an insurance desk at hospitals where they look through at what they've given you, look through the bill and maybe the medicine. Is that how it should be, or because you want to fight fraud?
Yeah, that's one of the ways insurers are trying to manage these costs. One, when you buy an insurance cover, it has boundaries. It starts from here and ends there. Sometimes when you look at it very well, it may not cover everything. So those desks, number one, are to ensure that you consume what you have actually bought. But two, also to eliminate that risk of Patrick taking a sister to consume insurance on his card. So they are there to verify, to validate, but also give the facilities assurance that these are our clients and treat them. You see, when you find an insurance desk, this is Kevin's facility, I'm the insurer, but I have a representative. Kevin now feels safer that because it is the person from me, the insurer, who is actually given an approval, then the reconciliation issues will be very minimal. So yes, one, it is part of customer service because you also don't want to feel like, will this card be, just in case the network is down, there is somebody who can support as the network is being sorted. But most importantly is also to try and validate and verify some of this information to reduce that cost of an extra cost to the insurer, which actually ultimately will be paid by the insurance consumer.
Kevin, I've witnessed a case where somebody walked into a pharmacy, have been referred there by a hospital to get drugs. And you reach there, they have referred you to that pharmacy, and the pharmacist says, oh, you're carrying this card for this insurance. These fellows don't pay, and the person is sick. And the hospital where they went, there's no medicine. And actually the pharmacist says no, because these fellows have a habit of not paying. They owe us a lot of money, and that person was chased. And, you know, such cases can be
yeah, definitely
heartbreaking.
When we hear of such cases, it is quite disappointing on our side. And that's why the Complaints Bureau was actually set up, so that in case there's any stakeholder, whether a customer or even a service provider, that feels either aggrieved by the actions of an insurance company, they can approach the regulator, and then we have that matter settled. Yeah, so it's something that we are ironing out with the industry players.
But Patrick, maybe to add on that, the greater part of explanation of such a scenario usually arises out of reconciliation issues, whereas at the face of it, it would appear like the insurance company is in wrong, because like we have already mentioned, some of these bills sometimes are very hard to understand. So if there is a reconciliation which is still outstanding and they have not yet settled, sometimes the payments delay. But what we have done as the regulator, we require that they have service level agreements, and our role is actually to try and mediate when those service level agreements are not respected. But we have also gone a notch higher, that yes, we have an eye now on the insurance company. Can we also extend the eye to the health service provider? And we have come up with some bit of guidelines. Maybe Kevin can comment on that further, where now we are going to accredit health facilities. Because also we realize that the problem may be the other side. Maybe we don't have the 360-degree eye on the whole cycle. And we say, okay, we are in charge. We have an oversight over the insurance company. If we have an oversight over the health service provider, maybe some of these problems will become as minimal as possible. Oversight to health facility in as far as insurance is concerned, not in as far as medical is concerned, because with that we know that there is a regulator.
Gentlemen, we're going to take a break. When we come back, I want to look into the third-party claims, because this third-party claims, especially the motor vehicle third-party, some majority of the people who have that third-party put it there not even knowing what it can do for them. For them, actually, I think it is for the police, for the traffic police, and that's all. And I think there should be a lot of sensitization on that. But also, I'll open the line so that those who are listening tonight can also have their say. We'll be right back. Welcome back to 933 KFM, and this is the Hot Seat. My name is Patrick Amara. My guest tonight, I have Sandy Protazio and Katete Kevin Walungama, all of them from the Insurance Regulatory Authority of Uganda. And this is the moment when you can have your say. Let me read the numbers so maybe you can call and engage the two gentlemen in the studio. The numbers are 0751 933 900, 0701 933 934. I already have a caller online. Hello. Yes, good evening, sir.
Good evening, thanks for the show.
You're welcome.
And
I have a problem with your net. I'm sorry?
I want to elaborate about insurance. There are some things I didn't know, but I've helped me to understand. Also, they are talking to Ekode Michael.
Michael Ekode, yes.
Now, but I have two questions. One, I understand when I've insured against maybe fire on my building, and if fire comes and catches the building, police comes on board. It does a report. Then even the insurance company also comes with its investigators. What if the two reports don't coordinate? What happens? And finally, how trusted are these investigators from insurance that they can give a genuine report about what they insured against? When they think that they forge so that they deny me to pay for my money, or my premium cancellation.
All right. So talk about maybe a case of a fire, and then there's a police report, an insurance report, and they are maybe not, they are in conflict. I have another call online. Hello.
Yes, Patrick Juma from.
Yes, good evening, Mr. Juma. How are you?
I'm good, thank you for serving the nation.
You're welcome. Go right ahead with your question or comment.
Yes, the line is service delivery. How transparent are they? Look at the organization when you read it to the government institute, whereby embezzlement is so much on government funding. So deliveries of services. Thank you very much.
Thank you very much. You want to ask whether the regulator is insulated against corruption. We have another call online. Hello.
Hello. Good evening, Kamal.
Good evening, sir. What's your name and where are you calling from?
Speaking the Luo man in Kampala is the Bernard Mugwe.
The Luo man in Kampala.
Yes.
Okay.
My question to those is that I lost the vehicle, or my vehicle was stolen, and I've been with insurance. Are they going to buy for me the new vehicle, or will they get me a second-hand vehicle? And then my vehicle was expensive.
If you lost a car and then do they buy you a new, or they just give you an old one? We'll have another call online. Maybe I'm going to take two, and then this gentleman can respond. Hello.
Good evening, Patrick.
Good evening. What's your name and where are you calling from?
My name is James. Now,
James?
Can you bring back something called Patrick?
Can you repeat that, sir?
Let me bring back something a little bit old.
Okay.
Do you remember the incident that happened at Kira Road where a truck came and rammed into vehicles that had parked at the traffic lights?
Yes, I remember near the police there.
Yes, at the police. Where those people compensated, all of them. Till today, many of those people have not been compensated. So what's the use of the third-party insurance, and how is the authority helping? If such an incident, people can die, people can lose limbs, and till today, those people have not been compensated. What is the regulator saying about that?
All right. My producer says I can take just one more. I have another call on it. Hello. Okay, looks like we've lost that line contact with somebody was trying to get to us. But gentlemen, you have heard the questions. Maybe you can share among themselves, or what you decide. We have another caller. Let's take just one more. Hello.
Hello. Good evening.
Good evening, sir. What's your name and where are you calling from?
My name is Ibrahim. I'm from Entebbe Road here, Gwebaja.
Ibrahim in Gwebaja.
Yes. Thank you very much for bringing those colleagues.
You're welcome, sir.
Give put a light to insurance. Indeed, we need to appreciate insurance regulatory authority. They have done a great job. There's a lot that has been done, especially in the last, let's call it 5-10 years, in the insurance sector, given the fact that Uganda was not the land of insurance. We used to know it in Nairobi and the others. But most importantly, the packages that have been brought, like education and the others, are very good. I wanted to know whether they are transferable. For example, if I subscribe to a package X and maybe I reach, because some packages have been resolved. I remember that USC had a package called Soma something, and they scrapped it. When they scrapped it, some people had subscribed to it. Maybe they had not just finished it. Yes. Can I transfer to another package?
All right.
It's allowed under the insurance.
All right.
The other thing is the time, the duration. For example, because they always say that they don't take someone after the time.
Okay, Ibrahim. Ibrahim, you have made your point, Ibrahim. I want to thank you so much. In the interest of time, gentlemen, you only have 3 minutes. Sandy and Kevin, you only have 3 minutes to respond to these. Please go for them.
Okay, no particular order. I will answer a few, then Kevin picks it from there. The truck, from the question from James, the Kira Road incident. Our office, James said, is in Kampala. I wish we could get additional information to this. It is something that we are really willing to work on. The question would be, were the vehicles insured? Did they have a policy which was valid? If it was valid, what is the issue? We can handle this issue to conclusion. James, just help us come to Lumumba Avenue Insurance Tower tomorrow or any other day during the course of next week, and you give us more details. We take it up. The Luo man in Kampala, his vehicle was stolen. Is the insurer going to buy a new one? Now, insurers replace the value that is lost. Insurance does not make you rich. So you cannot replace an old for new. If it's an old vehicle, the insurer is not going to buy your vehicle, but it's going to give the money worth the value that you have lost. You may choose to buy another vehicle, an old one, yourself, or maybe you choose to buy a new motorcycle, or you top up and buy a brand new car. So the insurer will not give you more money than actually you have lost. The investigators, if there is a conflicting report between police and the investigators. Now, these investigators are also licensed. They are actually independent. They are not representatives of they are not workers of the insurance companies. Among the people we regulate, we also license investigators. So once the investigator is appointed, there are ethics that govern them, and the report that they submit, if contested, they may also have to meet to meet the repercussions. So in most cases, these reports complement each other. There are these facts. Maybe an investigator is appointed to validate, and quite more than often, unless there is something fishy, these reports usually speak to each other. Kevin can speak to the rest.
Yes, so the question about the products, the life products, and whether they're transferable. So the thing with the life products is each product is designed differently. So what would happen is you should be able to cash out if you want to transfer the benefits to another product. So sometimes you may find your product may have reached a point at which it hasn't acquired value, and so that may be a bit restrictive. So when companies decide to scrap a product, it doesn't mean that your product will cease. It just means they're not going to sell new products. So what I would advise is you continue to service our product until it acquires value, and then you can cash it out for the new product. Yeah.
All right. So, gentlemen, I want to thank you. What's going to be your concluding remark, Kevin?
Yeah, okay. So my concluding remark is insurance should be seen not merely as an operational cost attack.
Every time I say you value it, insure it. You value a child, buy insurance. You value a vehicle, buy insurance. You value a business, buy insurance. Because without insurance, you have it today, you may not have it tomorrow.
Thank you very much, Sunday Protazio, Director Strategy and Market Development at the Insurance Regulatory Authority of Uganda. And thank you, Katete Kevin Walungama, Manager Licensing and Compliance. But most of all, you, the listener, I want to thank you for the privilege of your company. Good night and God bless Uganda.